Vincenzo'S Go Crypto Investing, August the 6th, 2025, daily cryptocurrency, blockchain technology, gold, and silver bullion update from a gorgeous, glowing, mostly sunny, crystal clear, light blue, late summer skies just north of downtown Detroit, inside the great state of Michigan, right? With a current beautiful, gorgeous temperature of 81 degrees, Jay. Hit that subscribe button, bell notification so you don't miss any of this information. And watch the long 20-minute video yesterday, the first video. We had a lot of insight on gold and silver and why Kinross Gold is going to be a 10 to 20x return from the point of our or my initial purchase on its way to its all-time high, right? We're up almost 3x, 2.5, 2.5, 250%, right? But if you look at the Bitcoin price today, it's rebounding nicely after it had a little bit of a dump yesterday, which was a technical dump. Then you can see yesterday, last night when we were talking, or actually it was yesterday afternoon, because I believe this was Thursday, Friday, Saturday, Sunday, and then coming into Monday, you had the big pump. And then Tuesday, we had the retest, and we were talking about when we were up here on this retest, could it make a slight higher low? And if it did that, it could make another run back up here and try to reclaim this high and then trade up into here. Or it was going to fall through and come down to the 100-day. Well, we're 24 hours later, and it held the 50-day moving average. And you can see we were down at 111,900 and change. We held at 112,000 about and 600 and change, about $800 higher, creating a short-term higher low. Right now, we're just at the old resistance point, and what you're trying to do here, and you can see why this is resistance. If you can break this area, you would come up into the next overhead resistance at 117,000 even, where you can see resistance, all that resistance right there. Right now, we're just touching this one and that resistance, right? So that's what we're looking at in the short term. What you need to know, and the most important thing I can tell you in this short term 4-hour time frame technical analysis, as long as you're above these two lows and the 50-day moving average, you can try to make a run up here at your next resistance, which starts at 117,000 and ends at 119,000. For any reason you get rejected into here or where you're at, the next move to the downside, if you eclipse this regional low right there from August 3rd at 111,900 and change, your next major underneath support is 108,000, or this pattern support from 3.5 years ago. And you can see as we scroll out a little bit, the pattern support started, and actually it was a long time ago, it was about 3 years ago. We'll go to the weekly to show you it quicker. You can see what the pattern support came from. And when it's a long-term pattern, you must respect them. And if they break, that means a big thing. You can see there was your mountain double top, there was your targeted move, and your low. And in September through November of late 2022, going into 23 is when we entered this pattern. And you can see through 23, 24, and to the midway point of 25, approaching the back half of the year, we're still respecting this. And if we do pump and we're having another consolidation, you can see we're in the weekly, we had our last pump here. See that? Of course, it always comes at the worst time. You can see where we had our last pump here. We had pump 1, 2, 3, 4, 5, 6, 7 weeks in a row of a pump and had a big appreciation. Then we had a sideways consolidation where we just alternated in indecisive candles where they're very skinny with wicks, right? Then we had our next leg up. Now look what we're doing. 1, 2, 3, 4 weeks up. Then we started the indecision candles on week number 2. If this consolidates and pumps to the next level, we're going to come all the way up here to 138,869. But there's a lot of work that has to happen to get there, and we're going to continue to watch out for it. But we just wanted to give you a farther out view as we exit the technical analysis for today. If we zoom into the Ethereum, it's another one that's very interesting, is because it bounced off a technical level like it should as we readjust the moving averages. It's been a couple of days since I did it. And as you do know, in some of these, not in these ones, we'll talk about it when we get to those coins. But right now, you bounced off a technical level, and you can see where you're at. Let's zoom out first. and then we'll give you what you need to know with Ethereum. Here's the macro time frame, and here's the pattern if you're a long-term holder, a believer, an accumulator, as this as your asset. We've been in this megaphone pattern when we had a big move to the upside in 2022 and 23, all the way up until we hit our megaphone neckline in March of 24 at 4,072. Then we hit it again in June in 24. Then we hit it again in December of 24. Now we're hitting it again in July of 25. And there's your horizontal resistance. Then your underneath support is descending that falls away. So that looks like a megaphone, right? If you were yelling on a TV, then you'd have the lines there. And if it breaks to the upside, your technical move is all the way up here. We should put a price mark up there, clone, is all the way up here at $10,323, right? But right now we're getting resisted on this, which would be what you would expect, and that's why we're going to zoom in now. Now that you know what the macro time frame, here's what you're looking at in the micro time frame to give you what you need to know to be fully informed for the macro and micro time frame. And in the short term, what you need to know here is we got resisted up here by the megaphone neckline. Then we said if you did, your area that you should hold support on, because it's your major short-term support, is 3483, the top part of the screen box. We fell into it a little bit, but got a nice ferocious rally on Monday, right? Tuesday we came down. Tuesday night, now Wednesday we're coming back up. If we can continue up above this 3483, we'll make a run and retest the megaphone neckline again at 4,049.04, right? And then that's where you would have to see if you could break it in the short term. But on the contrary, if you come down for a retest at 3483 and can't hold it, you will most likely, and I would predict you would not hold this low, and your next move would be down either to the 50 or the uptrending rising channel support, which is right along the bottom part of the green trading zone. But my guess would be you would get a nice bounce off of 3201 back in to the 3478. So in the short term, you hold the 3478 on any kind of retest. You stay short-term bullish to 4,049 megaphone neckline resistance. If you get rejected and fall below for any reason this 3478 top part of the screen trading box, you will breach, and at least I believe, your regional low right here and come down to the 50-day moving average and most likely get a retaliatory textbook bounce off of it. XLM, this is the one we have these new thick lines. Anytime you see the thick lines that are red, blue, and green, like this, red, blue, green, they match the daily moving averages that we have using here, right? These are the weekly moving averages, the 50, the 100, and the 200. Just wanted to have them on there in case we have any kind of a fall. We can track the moving averages because that is very important to understand where those are at. If we look at the daily time frame real quick, the macro time frame, and then we'll take a look at what you need to know today. For today in the short-term micro time frame, you can see the moving averages have consistently been trending up as the price has been consistently for about a week to 2 weeks higher than the moving averages. But you can see where you're at now. You're coming off of the big run-up. You're coming off the big run-up in November up to 63 cents. And remember, bell notification, join Jabroni Killers to help keep these videos coming for free. Join me on my mission to become an asset millionaire via gold and silver bullion and mining stocks, 401k study investing, cryptocurrencies, real estate, cash on the side, earning 3 to 5% in CDs or bonds for emergencies and buying a new or accumulating into an existing asset, right? And it's as cheap as $3.99 a month. It starts out at to support the channel, to be a Jabroni Killer, video description and or pinned comment. But you can see ever since we hit that 63 cents, we came down, and then our track showed us coming down and leveling off, and then they showed a nice rise up. And I should have took account because we talked about how Julys often have rallies, even though some have big falls. And it rallied. Now the tracks show it leveling off what it did, but now they show over the coming months a leveling off sideways to downish, and then having a big pump as we head into the new year. So that's something in the macro time frame that we're going to be paying attention to. But in the micro time frame, the most important thing that we can talk about here and understand in the short term is where your support and resistances are in the short term. And in the short term, your major short term resistance is 43 cents. And as long as you're below that, you know you're short-term bearish. Your major underneath support is the 36 cents, the top part of this green trading zone. And as long as you're above that, you can make a run at the 43 cents, right? But if you come down for any reason back to this 36 cents, you're most likely not going to hold it because the 50-day would be retested again, and you would most likely come down to the 33 cents. So on any kind of retest, the short-term major support, if that breaks, it'll go to your secondary major support in the short term, which is the 100-day moving average in blue at 36 cents. If you can hold where you're at now and make another run at 43 cents, that's where you would have to get on top of that and break it to be short-term bullish. So to conclude, 43 cents, major short-term resistance. If you get on top of that, you're now short-term bullish. As long as you're below 43 cents, you're technically still short-term bearish. And on the contrary, your major short-term support is 36 cents. If you get below 36 cents, you're medium-term bearish, and the 100-day moving average would act as a magnet to 33 cents, right? So that's what we're looking at there. XRP, similar, just at a different price level. You can see XRP got rejected off of this 307 new major upper resistance in the short term, and that is what you need to know. That's your major short-term resistance is the 307. Got rejected off of it, but held just above the 100-day moving average. So as long as you're below 307, just like we've been talking all the way since you got above it, you would be short-term bearish as long as you're below this, and that's what you are now. And as long as you're below that and you can't get above it, it wants to act as a magnet to bring you back to the 50 and then eventually back to the 100-day moving average, which is right on your major underneath short-term and medium-term support at 255, right? So as long as you're below 307, what you need to know is you're short-term bearish. If you can get on top of 307, you become short-term bullish and can make another run at 376, regional high. If you get rejected again by 307, a retest of this regional low right below the 50-day moving average would be likely, and it would likely fail and cause a retest of the major short-term support at 255 with the XRP. And that's what is going on in the coins. I'm going to get this out to you. Peace and love to my lovely, glowing, beautiful audience. The Rex eyebrow, Jay. Didn't forget.